Hello everyone, welcome to the channel. In this video, you're going to learn about many aspects. One major aspect which you might learn out of this video is how you should develop your mindset. Okay, and second thing what you will learn from this video is how you can plan your trades, how you can execute your trades, how you can journal your trades. Okay, so in this example, before even we start, what we should eventually do is we should go back to weekly chart, and we need to mark our uh, 1 second. We need to make a narrative out of the previous week as to what is the structure, how is the market reacting, all that we need to mark. So first things first, what we can see is on Friday session there was a huge push to the upside and leaving us a open demand. There is one more gap which is yet to be filled. There is a supply here, there is a supply here, there is a supply here. These three are the major things which we should note out of the 4 hours chart. Okay, so where market opens is more important, how market reacts is even more important. Today market opened pretty big gap up. Okay, so market closed somewhere close to 23,650 ish range. Today market opened very big gap up, around 24,000 it opened. Okay, this is where market opened and market was not able to sustain in the range. Okay, so I will delete this entire replay bar, and I will show you hour by hour as to how your mindset should be, what you should think during the market hours, and how you can journal your trades accordingly. So first things first, let's take time till 10 o'clock. This is a chart at 10 o'clock. So what you can see from this chart is market has formed a high, market has formed a low. Now market is ranging in between. This is what is going to be your thought process. So immediately what you should write in your journal. This is how you should write your journal also. 9:15 to 10 a.m. Nifty opened with a significant gap up, right? Immediate emotional reaction was everybody will have, even if you are a human or even if you are a robo, if you had taken a call position on Friday and closed it, the moment you saw such a big gap up, you will think like, why I did not hold the trade. Even I, being a human, I had small regret as to why I did not hold Friday's position, but we cannot do anything about it, right? C's premium were exploding because and Friday, if a particular call option was closed somewhere close to 80, it opened itself somewhere close to like 200, almost double, 250 times it did not, it opened up. So when it opened like this, obviously our initial thought process would be like, why we did not hold it. Okay, so what was the action taken? I did not chase, I did not buy C due to FOMO, I did not scalp. I don't wanted to scalp for 5-10 points and then close the trade. So what was the observation? Between 9:15 to 10 a.m. That is between this particular range. What is the observation which we have? The observation which we have is market opened directly into the anticipated supply area. This anticipated supply area is nothing but whatever we have marked in 4 hours time frame. This indecision candle which brought the breakout structure on the downward direction, this indecision candle is your supply zone, right? So this supply zone is what I had said, market opened directly into the anticipated supply area. No bearish breakout structure was available, meaning if I go back to 5 minutes, this was a low which was formed. I did not get any breakout structure on the downward direction to this low. So I was waiting as to whether it will form a breakout structure or not. Okay, so next point what I wrote is no bullish continuation setup was available. What it means is I don't see the market sustaining above the high and going upward for planning a bullish. So market did not give me a bullish setup, market did not give me a bearish setup. So we need to sit patiently. This is the first and foremost thing every trader has to learn. Decision was to stay flat. Don't do anything, just observe. Results, no trade taken. Till 10 o'clock, no trade was taken. So what about 10 to 11? Let's go back to the chart and let's delete this and let's take the market till the time of 11 o'clock. Okay, so let's go back to the replay bar, start new, and see the market at 11 o'clock. So what is the observation which is available at 11 o'clock? Again, we will draw the structure. Market is high is here, low is here. Market went up, came down, went up. Did it break this high? No. Did it break this low? No. Market is still ranging. But one thing which we should observe at 11 o'clock is market formed relative equal highs here in 5 minutes time frame as part of liquidity. Okay, second thing what we have to notice, market formed relative equal lows here as part of liquidity. So I have told in several videos of mine, liquidity will act as a magnet. So what can happen is market can sweep this, reverse, and then pull back, fall. This is one option if in case buy side liquidity has to be taken. Second option what we can see is market can sweep this, go up, come down to a demand, and then take this buy side liquidity. One of these two can happen. Third option what can happen is market can give a proper closure and give a continuation trade like this if there is no reversals. Last option what we have is market can give a closure below, pull back to a supply and do a continuation. These four are the possibilities now we have identified. See, till now we have not taken any trade. We did not predict any trade that market is going to go up, market is going to go down. We did not do that. We are just waiting for the market to give a reaction to all these four kind of possibilities which we have, and we can take a trade based out of that. So 10 o'clock to 11 o'clock, market remained inside a tight range. This tight range is what I was meaning. This high, this low, market was ranging in between. It does not matter market, oh, we did not capture this move, we did not capture this move. That's not our concern. Our concern is what is market saying. Relative equal highs, relative equal lows started forming. I wrote all this, liquidity accumulated on both the sides. Analysis. There are two possible scenarios I identified: sweep, reverse, sweep, continue. This is what I just explained. Actions, no entries. Alerts were placed. Where I placed alerts is one at the high and one at the low. I placed alerts, and I was like pretty bored with this, watching this chart, because market was not giving one-sided momentum. I felt boredom, felt temptation seeing options premium move, resisted all urges, no trades taken. See, till 11 o'clock I did not take any trades. Okay, then let's move to 12 o'clock. Again we will close this and we will do the replay. I'm doing this because I want you also to do similar kind of a thought process, similar kind of analysis during the market hours, and write it so that you also will have a clarity as to what the market is doing, how you should plan your trades, everything. Okay, so at 12 o'clock, what is the situation? Market is still ranging. It did not break the high, it did not break the low, it did not sweep, it did not give BOS, nothing. It's just ranging. That's what I wrote. 11 to 12 continued ranging. No clean break of structure, no pullback entry, no clear demand confirmation, nothing. Market was not providing a valid setup. Walked away from screen temporarily, went for a juice break. I just put alerts and I went for a break, because see, this is the mindset you should have. If market is not gonna give me any trade, why should I take a trade? I will not take any random trades. That's the mindset you should also have. Okay, till 12 o'clock no trades were taken. Okay, again I will close this. Sorry, I am taking so much time so that you guys have a very clear understanding as to how you should also plan your trades. That's the reason I am taking so much time. Okay, this is a chart at 1 o'clock. So what we have at 1 o'clock, we have that market has clearly broken the trend in the downward direction and market is accumulating. What does this leave us? This leave us a refined supply. So I will delete this original supply which we marked, and we have marked a refined supply which was a candle before the break of structure. Okay, so ideally if market pulls back to this particular supply, we can plan a short position based on confirmation. What do I mean by confirmation is we will switch to 1 minute time frame once the tap happens, and we will see if the market comes back to the supply. Once it comes back to the supply, then we will initiate a put position keeping this swing point as our SL, and we will target, we'll discuss about that. So 12 to 1 o'clock, equal highs remained intact, meaning market did not sweep this equal highs, right? That's what I meant. Market began showing weakness. Buyers were unable to create fresh highs. Analysis is momentum appeared to be building towards downside liquidity. However, no confirmation existed yet. Continued waiting. Around 1 p.m., equal lows swept. Strong bearish BOS formed. Market finally broke structure decisively. See, this is the mindset you should have. At 1 o'clock, around 1 o'clock is when this break happened and market was ranging. Okay. High liquidity already swept earlier. Range established. Lows, equal lows were taken. Bearish displacement confirmed. Now, this is the important part. A valid bearish narrative now existed. Range, meaning market was in a range between high and low. Equal lows was taken. Bearish breakout structure was formed. Now, if a pullback to a supply is got, I have a potential short. This is my trade plan. See how I did not hurry into the trade, but market gave me this trade. If I get a pullback here, then I can plan a short. This is what is going to be your mindset. So I will allow this trade a little bit forward to play and see if we can get a tap into this supply. See, I'll just pull back to this particular candle. So I'll switch to 1 minute time frame here. And if I allow this to play, you see that market tapped into the supply, but I did not immediately enter because this can eventually keep moving up. I want this particular market to come back into my supply, meaning even though market tapped into this, I will not immediately enter. The moment it goes like this and comes back here, comes back to the supply, only then I am interested in this trade. So if I allow the next candle, this was a momentum entry I took. When it came back here, my entry time was somewhere around 113. Okay, 113 is when I entered, and market kept pushing down. Okay, I was holding this trade. I wanted at least the equal, meaning the low of today to be taken out, and then I will start to trail is what I had as a mindset, because market was not giving a very big momentum move. So once the low is taken, I will start trailing candle to candle and see how it goes is what I was thinking. So this is the place where low was taken, and I moved my stop loss immediately to this candle, and the next candle itself hit my stop loss, and I exited the trade somewhere close to 150ish time. I will show you the PNL also, and I will show you the execution also, so that you guys have a understanding that I am not blindly explaining only with charts, and I am also taking the trades. See, this is the only entry I took. Although the profit is, don't worry about the profits. The important point is what time I entered. Okay, if you see the entry time, it's exactly as mentioned in the video, 113. Okay, and exit time is 153. If you see back in the chart, 113 is this momentum candle where I entered, and 153 is this particular candle, 151, 52, 53. This is the candle where I closed my trade. Now, my question is, when I come back to this journal, I wrote trade execution, equal low swept, bearish BOS confirmed, pull back into supply, fresh supply is available, risk is defined, entered PE, stop loss above supply, initial target was days low, extended target, I wanted to see a gap fill which can happen, otherwise I'll start trading. This is what should be the actual way you should plan your trades, you should execute your trades, you should journal your trades. Trade completion, target hit, position closed, deactivate your segment, close the charts, ended trading day immediately. It does not matter to me what happens. See, these are another things which you should write in your journal. What are the lessons you learned? The best trade today was not the entry. The best trade was waiting from 9:15 until a valid setup appeared. Lesson number 2, boredom is not a trading signal. Market owes me nothing. Market is not going to give me, okay, market, I'm going to go up 50 points, please enter. No, that is not what I'm going to do. Market is not going to give me anything. It is up to me to decide whether if there is a setup, I will trade. If there is no setup, I will not trade. Lesson number 3, patience produce profit. Forcing trades would likely have produced losses, right? You would have seen yourself today. If you had not followed any kind of setup, if you had blindly entered, you would have forced 100 trades and you would have produced 100 losses. Now answer me this question properly. How many trades did you take? Did you take one trade? Did you take 5 trades? Did you take 10 trades? What was your mindset during the entire day? Were you happy? Were you frustrated? Were you calm and cool? Did you understand the knowledge behind all the concepts I explained? Lesson number 4, which is very important, is the process works when followed. See, today's profit came from understanding liquidity, breakup structure, pullback, supply, risk management. It did not come from prediction. Now, you can also learn such concepts. I will put a link in the description for my entire course, which covers all the topics which I explained in this particular journal, in this particular video also. You can master yourself. Please spend time in learning. That is more important. How much money I make, how much money the other person make, how much money the third person lost, that is not important. How much are you knowing from the market? That is way more important. I'm not going to talk about tomorrow's prediction in this video. I'm not going to give you levels. I'm not going to give you anything at all. What I have to take you from this particular video is, how is psychology important in the market? That is a way more important thing which you should take. End of the day reflection. Today was one of the cleanest examples of following my strategy exactly as intended. I remained flat for several hours. Gap up opened. Strong market movement was there. Premiums were exploding. Boredom was there. FOMO was there, but I did not enter. I waited for liquidity sweep, bearish breakout structure, pull back into supply, executed the trade according to my plan, achieved target, stopped trading. Now tell me, if I repeat the same process for 10 days, then whatever money I make is secondary. I am the most successful trader, is what I can proudly say about myself. I want you also to say the same thing about yourself. See, trading, anyone can trade. Anyone can trade. Excuse me. Now you can say, like, market is going to give me a reversal, I will plan a long position and I will target this supply. Do whatever you want after this. That is not my concern. My concern is, I wanted to execute my trades properly and I wanted to exit my trades properly. If I can do my entry, nobody can catch the move from this place all the way to this place. Nobody can do that. I will give it to you in writing. But if you can capture this move according to process, you are a successful trader. I will give it to you in writing. You are a very, very good trader and nobody can stop you from making money. If you understand the liquidity concepts, breakup structures, supply, demand, everything, please spend time in learning. Again, I'm emphasizing, I don't want you to take only my course and learn that course and implement it. No, it's not necessary. If you're sticking to one strategy, stick to that one single strategy. If you are following Bollinger Bands, follow Bollinger Bands. If you are following support and resistance, follow support and resistance. If you're following pivot points, follow pivot points. But the problem which many people don't understand is, they will follow support and resistance, but if support and resistance does not give them a trade, they will feel bored and they will switch to some other strategy. They will ask some other Telegram channel, they will ask some other live YouTube channel, sir, entry milega kya? Sir, shall I enter now? Sir, shall I exit now? Sir, I made this much profit. Sir, I made that much profit. No, that is not who you are. That is not why you came into trading. Ask yourself this question today. Just spend half an hour time, take a notebook, start writing. Why did you start trading? What was the reason for you to enter trading? If you are in a mindset that trading will make you so much money, then please quit trading today itself. Trading will make you money, I'm not denying that. Trading will definitely make you money, but trading will teach you a lot of other things apart from making money. It will break you to the core. It will break you to the core. It will make you to hit rock bottom. It will make you to understand discipline. It will make you to understand patience. It will teach you the importance of all that. Only then it will start making you money consistently. To reach that level, you need to master yourself. Mastering yourself will not happen in one day. It will take months and sometimes years also. For you to achieve this mastery, you need to do a lot of things with respect to yourself, be it meditation, be it yoga, be it working out in the gym, be it doing something, be it spending time with the charts, be it back testing, understanding one concept, implementing the same concept 100 times with proper risk management, with proper discipline. You will achieve success and nobody can stop you from making money. Please, again I am emphasizing this point, this video is only for educational purpose. It will make you to understand when to enter, how to enter, when to exit. Simple, that's all. If you understand these three concepts, this is my entry, this is my stop loss, this is going to be my ideal target, and beyond that I will start trading. See, this trade is 1 is to 5.7, which means for every 1 rupee you invest, you will get 5 rupees 70 paisa in return. I made X amount of money, that is secondary. But I don't want you also to invest that much amount of quantities and make that much amount of profit. It is up to your risk management. If you are comfortable entering in one lot, trade with one lot till you get confidence in one particular strategy. If you're comfortable with two lots, go with two lots. Don't increase your lots randomly, just thinking that today itself I will become I will make 1 lakh, I will make 1 crore and all that. It's not possible. It is a continuous process. I hope this video is educative. Thank you so much for watching. We'll meet in the next educational video. Thank you so much for watching. We'll meet in the next educational video.